Good morning. It's Monday, May 2nd, 2022. I'm David Magard, and you're listening to Property Value, where I discuss commercial real estate focused on South Florida. And the first one is a big article. It's all over the headlines. Let me bring it up. This article is from the South Florida Business Journal by, I don't know who wrote it yet. I'll tell you when I find out. But it says, Inter Miami CF Soccer Stadium lease deal scores approval from City Commission. Now, if you're living in Miami or South Florida, if you're probably more in Miami, and a soccer fan, this has been going on for some time. And this is written by Eric Bohinski, reporter for the South Florida Business Journal. This is about our soccer team, and one of the owners is David Beckham. So let's read the article. The Miami City Commission approved the Inter Miami CF Soccer Stadium lease deal in a massive commercial complex at Melreese Country Club. The deal had to win votes from 4 out of 5 city commissioners under the terms of November 2018 referendum. Ultimately, 4 commissioners voted in favor of the deal Thursday night, with 1 voting against it. The agreement will allow Inter Miami, owned by Jorge and Jose Ross of Coral Gables-based Maastricht, and celebrity soccer player David Beckham to pursue a 99-year lease at the property. Excuse me. They plan to construct a 73-acre Freedom Park complex on the city-owned golf course at 1802 Northwest 37th Ave near Grape Lynn Water Park. The complex would include 25,000-seat soccer stadium, which is what everybody wants, 1 million square feet of retail, an office, and 750 new hotel rooms. However, this agreement isn't fully consummated yet. The development team needs 2 more city contracted appraisals for the 73-acre site completed by 2 separate companies to determine the Inter Miami's annual base rent that will be paid to Miami. It could be as low as $4.3 million or more than $9.8 million under a deal outlined by Vice Commission Chairman Joe Caro. Once that appraisal is finalized, the commission will ratify the lease. What's more, the Miami City Commission also still needs to approve massive zoning changes that will enable Inter Miami to construct the Freedom Park complex. City officials asked for other changes in the initially proposed lease. For instance, Commissioner Alex Diaz de la Portilla asked for a 6% share of the gross rents collected from the future office and retail tenants. His district surrounds the Melreese golf course. Those rent proceeds will be split between Diaz de la Porta's District 1 and Commission Chairman Christine King's District 5, home to some of the lowest income residents in Miami. Some of the other changes in the proposed lease included a promise to complete the construction of the stadium in under 4 years, to give preference to the hiring of city Miami residents in the construction of the complex, and to hire ex-cons who served their time. Additionally, Inter Miami will approach the University of Miami about hosting the college's Hurricanes football team at the stadium. Finally, Moss Brothers promised King that they will work with the Southeast Overtown Park West Community Redevelopment Agency to build a project on 10 acres of land at 650 Northwest A Street in Overtown that could benefit the area. Prior to the 2018 referendum, Inter Miami's previous ownership intended to build a stadium on that site. It's still owned by the team. During the Thursday meeting, heated discussion on amendments to the park element of the lease nearly derailed the deal. Originally, the Inter Miami said they would spend $20 million in the creation of a 58-acre green space park near the complex. Instead, Corella pushed for deducting $16 million from Inter Miami's first 4 years of rent and paying the city another $20 million so it can build its own parks. That's in addition to another $5 million the team previously pledged would be used to build baywalks. Commissioner Ken Russell insisted that at least part of the money be used to turn city-owned land along the Rickenbacker Causeway into a 150-acre park in Virginia Key, although Caro and King agreed With Russell's terms, Diaz de la Portilla objected after denouncing Russell's District 2 as one of the wealthiest in the city. Diaz de la Porta insisted that the office determines how the $20 million was spent since the stadium was being built in his district. I'm generous, Diaz said, indicating that he will willing to share the proceeds with other districts. This seems like it's getting a little dicey with the proceeds and with Miami's history of funds and corruption. I don't know. I don't know how this trickle down goes with this money that they're squeezing out of the soccer team. They're bringing a soccer team and then they're squeezing them out of millions of dollars. And now those millions of dollars don't have just one particular park that's going to be built. It's being dispersed among other districts. So will you really be able to see the impact of that money? Or will it just go into officials' pockets? Russell's, though, said he didn't trust Diaz Portillo and would vote against the deal. If I had a nickel for every time I trusted your word, I could fund this Baywalk myself, Russell told Diaz. It goes proving my point right here. You are the same guy who put $150,000 into my opponent's campaign when I was running. You want to play a game? Let's play the game. See, they're already not going down the same road, it seems. Half-hour recess was called, during which Mayor Francis Suarez, a major supporter of the stadium, spoke to Russell. When they returned, Russell agreed to compromise in which District 1 could have $12.5 million, with the remainder split between the other four districts, and promised that the city would create a new park on Virginia Key. The Moss brothers obtained a majority interest in the team after buying out the shares of SoftBank executives Marcelo Clar and Massosi's son in September 2021. Jorge was his champion in his pending stadium deal as the only one in the nation that would be constructed without government subsidies. At the meeting, Moss said the project would create 15,000 direct and indirect jobs and would create $11 billion impact in the first 30 years of the lease. Jose Moss describes the deal as a legacy that will outlive us. For business owners, they are expected to be major opportunities in the 400,000 square feet of office space and 600,000 square feet of retail entertainment planned around the stadium. So big win for Miami, big win for soccer fans, and can't wait to see the stadium and actually go and enjoy it. So there's a lot of talk about mortgages and interest rates and what's going on in the market. So first, we're going to start with the real estate. This is from CNBC, written by Ray Perezzi. Title goes, real estate inventory plummets in South Florida, but the luxury markets are hotter than ever. What does that mean? The supply of luxury homes and condos in South Florida isn't merely tight, it's worse than that. This isn't just a decline in inventory, said Jonathan Miller, CEO of Miller Samuel, an appraisal and consulting firm that tracks 14 real estate markets in the region for brokerage Douglas Elliman. This is a collapse. That's not a hyperbole, according to the numbers. In the first quarter of the year, South Florida inventory stood at a record low of 7,900 units, according to Miller's data. That's down from an average of 27,000 units from 2017 to 19. Miller doesn't see the situation getting back to normal anytime soon either. Even if listing inventory doubled or even tripled, supply would be considered low in most markets, he said. But sales are red hot. Despite that low number of available properties, the first quarter saw more than $11.8 billion in total sales, topping the previous quarter by more than $1.9 billion. Some luxury markets achieved record highs, according to Miller. The area's top 5 luxury real estate markets delivered over 45% of all sales volume for the region, or almost $5.4 billion, according to the data accompanied by Miller and Douglas Elliman's firm report published earlier Wednesday. Here's a list of the top 5 luxury markets in South Florida by average sales price and a closer look at how headwinds like low inventory and rising mortgage rates might affect future sales. Number 1 market, Palm Beach. For the fourth consecutive quarter, Palm Beach secured the top spot in South Florida for the highest average luxury home sale price. The town accounted for half a billion in total sale volumes, according to Miller's analysis. The average price of a luxury single-family home in the ritzy beach town topped $21 million. Luxury is defined in the Element Report as the upper 10% of sales in the market. The average per square foot was $3,659, down 2.7% from the record price in the previous quarter, but the number of sales closed in quarter one totaled 15, up 67% over the fourth quarter. See, that's interesting. So quarter four of 2021 had the highest sales and the highest per square foot sale. That means they were getting the most bang for their buck, the most for their dollar. Now, in the Q1 2022, they had to reduce that price per square foot, meaning that the values did come down in quarter one 2022. Even though they had more sales and the sales volume went up, that volume went up because the sales price per square foot went down, enabling the buyer to have more bang for their dollar. Palm Beach also had the biggest first quarter sale in South Florida. The beachfront home at 854 South County Road closed at $53 million, according to public records. The 10,000 square foot residence sits on 2 acres across the Intercoastal Waterway with 220 feet of water frontage, according to the listing. The price per square foot was a whopping $5,200. Listing agent Gary Poher, he retired. No, I'm just kidding. He of Douglas Elliman told CNBC the size of that estate and waterfront set the property above the rest. When asked about his outlook on the market's future, cautiously optimistic, with the biggest worry being a serious inventory problem. Cautiously optimistic. If you look at the history of the active listings, we are at an all-time record low. That doesn't change overnight, said Pollard. Miller sees the inventory crisis having a significant impact in upcoming quarters. It will restrain sales below their potential and sustain or increase the market share bidding wars. Second best market, Miami Beach Barrier Islands. Miami Beach Barrier Islands was the second most expensive luxury single-family home market in the report. 17 closings, an average price almost $17.9 million. The average price per square foot, $2,700, down from the record $2,800 set in the previous quarter, fourth quarter of 2021. Total sales volume at the price levels in the market was almost $2.9 billion, second only to the Miami mainland market, which racked up $3.9 billion in sales. Third, Coral Gables, which is located southwest of downtown Miami, was the third most expensive luxury home market with 15 closings and an average sale price of about $10 million. The record for the area, the average price per square foot, $1,600, and that's up 33% previous quarter. So looks like they're winning in Coral Gables for their pound for pound dollar. Fourth place is Fort Lauderdale Market, which delivered 57 luxury home sales at an average price of $6.9 and an average price per square foot of $1,100, according to Miller, both all-time records for Fort Lauderdale. And the fifth spot goes to Boca Raton Highland Beach, was the fifth most expensive luxury home market with 60 sales at an average sale price just $5.5 million. The average price was per square foot of $670. The market achieved the fourth highest home sale in all South Florida and a record-breaking price for the town of Highland Beach when the oceanfront mansion, 2455 South Ocean Boulevard, sold for $40 million, according to public records. The sale of the 17,600 square foot home, yes, I did say 17,600 square foot home when most of us live in a home around 1,500 square foot to 2,000, was the highest price ever for a Boca Raton Highland Beach, according to Miller. The home's listing agent, Beverly something Knight of Ocean Estate Properties, told CNBC the mansion's move-in ready status was plus. Fully designed, furnished, write a check, move right in. Hard to find this in the market, she said. Knight also told CNBC the buyer paid an additional $5 million for the furnishings, bringing the record-breaking sale to $45 million. When asked about the rising rates and low inventory might impact real estate sales in South Florida, Knight said it all depends on the market. But she believes when unforeseen events negatively impact the market, it's homes on the water that have proven to be the most resilient. I take great stock in believing that history has shown that the ocean front is always the last to crash and the first to recover, said Knight. Great article, great data. So now we're going to look at a little video that I have about mortgage rates and refinancing and what's going on. Let's listen and hear what they say.
Hit by higher rates that is hurting the lenders, but there is one surprising growth spot. Diana Olick here with the numbers. Diana?
Well, Kelly, the drop in mortgage demand is not exactly unexpected given the sharp rise in mortgage rates, but the numbers are still pretty stunning. Total mortgage application volume last week was about half of what it was a year ago, half. While home buyers are pulling back, the biggest drop is in refinance demand. It was down over 70% from a year ago, and a year ago, refinance lending was the majority of the mortgage company business. Now it's down to barely a third. So for lenders, that's really just a crushing blow to business. So take a look at some of those names. Rocket, its stock is down about 38% year to date. The company also just announced it's offering buyouts to 8% of its workforce. Loan Depot stock down about 36%. The company's CEO also told me there would be layoffs there as well as it adjusts to the new workload. And another, Finance of America, down a whopping 58% year to date. And finally, Guild Mortgage down about 38%. Last month, Guild was downgraded by both Wells Fargo and JP Morgan Chase. All of this, of course, because mortgage rates have risen so sharply, the average on the 30-year fixed up about 2 full percentage points year to date. And the expectation is that it will continue to head higher as the Fed gets more aggressive in trying to stem inflation. Kelly?
Diana Olick, is it true that demand for adjustable rate mortgages went to a 13-year high? And if so, it's one thing to bet on stocks you think could benefit from lower interest rates. It's another thing to stake everything on it.
Well, it's not as risky as you think. ARMs can be, set a fixed rate for 5, 7, even 10 years. But yes, we did see ARM demand literally double in the past 3 months. That's huge. People are looking for a lower rate. So a rate on an ARM is about 4.28%, whereas you're looking at well over 5% for the 30-year fixed. So again, those loans are not as risky as they used to be, and they're a good option for if you're going to stay in your home 5 to 10 years.
That is totally fascinating. Diana, thank you very much.
Great information. You see how even though the luxury market is still red hot in Florida, South Florida, and it's showing that houses along the water are the ones that stay the longest and recover the fastest.
Yeah, that's right, Kelly. And the monthly figures were basically flat because the previous 2 months were revised.
Still on that. So let's get off that. But the video showcased that there's less lending going on because people are being priced out of the market. Obviously, the luxury market is going to be more resilient. Top 10% are not worried so much as rates increase. But here's a look at the Wall Street Journal's market, U.S. 10-year Treasury note, 2.956, almost to that 3% mark. Last week, it was very volatile, around 2.8, down to 2.7, 2.8. And here we go, Monday morning, 2.956. Wondering if that even increases over 3% as the day goes on, or as we reach into Tuesday. We'll have to keep you updated on that. And then just to lay, so it says today's national mortgage rate trends. For today, Monday, May 2nd, 2022, the average rate for a 30-year fixed mortgage is 5.41%, an increase of 12 base points over the last week. Went up 12 base points over 7 days. If you're in the market for a mortgage refinance, the national average 30-year fixed refinance rate is 5.42, up 16 basis points over the last week. Meanwhile, the national average 15-year fixed refinance rate is 4.69, up 17 basis points from a week ago. Those are fixed rates. And what the article was saying was actually talking about ARMed rates, which adjustable ARMs, which are more risky. And when rates go up to make it more affordable, people might start gravitating to that. And that's what the ladies and the charts were indicating that. But when people gravitate to those adjustable rate mortgages is when people get in trouble when the market goes the wrong way and they're not ready to call or refinance because they go underwater, and that's when people have to give back their houses, unfortunately, to the bank and are foreclosed on. Anyways, don't want to leave on a bad note. Miami's getting a soccer team, and the stadium's going to be built. The vote went through. That's great. That's good news. I'm David Magard. You're listening to Property Value. Have a great week. Talk to you tomorrow.